Hey everyone, welcome to Talk to the Expert Thursday. I am virtually at my favorite coffee shop, Mostra, talking to one of my wonderful partners, my lender partner, Mike Francisco. Hey, Mike.
Good morning, guys. Hello, hello.
And, he and I have just been bantering back and forth about, what kind of value add can we provide our friends and family and our clients. And a topic that comes up all the time is credit and how to repair your credit and, things that you should know or didn't know that affect your credit. Because obviously, having a strong credit is going to affect your ability to secure a loan and therefore buy a house, whether it's your first house, your move-up house, or even your downsize house. All obviously your credit is extremely important. So he came on to talk about from his perspective, but also to introduce us to someone that knows a lot about credit. So go ahead, Mike.
Awesome, guys. Well, hello, guys. Thanks for having me on this show today. I like to call it the Zoom show with Jocelyn. So yeah, today we have a special guest. He's one of our affiliated partners with Prime Lending. Definitely someone we trust with our team, especially our clients when it comes to credit tips and helping them improve their credit score so that they're prepared when the time comes, we can get them pre-approved and help them secure the lowest possible interest rate. As you know, credit is a huge part, a huge essential when it comes to qualifying for a home loan. So with us today on Zoom, we have our good friend, Mr. Adam O'Loughlin. Did I say that correctly, Adam?
Adam O'Loughlin, you got it.
Awesome. He's with Brightside Credit Services. He's a rock star, definitely someone that knows what he's talking about when it comes to credit. Someone I personally trust with my clients. And we have him on the Zoom call today to give us some insights on what people can do during quarantine to help improve their credit situation, even if that's taking it from 10 to 15, even 20 points, things that we could do from home. So Adam, without further ado, please take it away. Talk about where you've been, your bio, and talk more a little bit about Brightside Credit Services. Thank you, sir.
Yeah, absolutely. Hey, thanks for having me on the Zoom. It's nice to meet everyone and really happy to be here to help share some credit tips on what's going on in the market. I know everyone in this time of COVID-19, people have a lot of questions about credit. And so I'm happy to be on the show. A little bit about our company. We're based in San Diego. We've been in business for over 5 years. We're 5-star Google rated. We really pride ourselves on great communication with our customers and really keeping them informed of all the changes that are happening in FICO. What we do is we do 100% full-scale audit on people's credit scores and really help them get their credit scores up through a variety of tactics. And challenging the credit bureaus, making sure everyone's information is 100% accurate. So that's just a little bit about our company. With that, a couple of things that I'd like to go over. Number one, I know right now it's a really stressful time, but make sure everyone is paying their bills on time. Creditors are still going to be, watching your credit scores. And so a good thing is just to put all your payments on automatic deduction. That's number one. Number two, keep inquiries low. People probably aren't shopping as much these days for high-ticket items, but like auto loans and things like that, you want to keep your inquiries low to keep those points off your credit score. Number three, this may be a good time to reach out to people that you owe money to, as you may be able to negotiate better terms. So maybe if you have maybe a $1,000 balance on outstanding debt, you can maybe negotiate maybe 10 to 30 cents on the dollar. Because creditors are taking money in these times, and so it's a really good time to negotiate with your creditors. Let's see what else. You want to check your credit report regularly. Make sure nothing new is popping up on your credit report. And let's see. Let's keep inquiries low. Pay bills on time. Number 4 is credit cards. Now, this is an important one. And I know things may be a little stressful and tight on money, so people have a tendency to put things on credit cards. but it's really important to keep your credit utilization down as low as possible, between a 10 and 30% range. And so that shows the credit borrower, the creditors, that you're spending money responsibly. You also want to, and some people, if they're trying to build their credit card, they may want to get a starter credit card or a secured credit card. That's another way to effectively build credit. And you also want to make sure that you keep a good credit card history active. So if you have an average of a couple of credit cards, you want to keep that history as open as long as possible. And that shows a good credit history. So those are some of the things that I wanted to outline today. And so with that, those are my tips for the day.
I have a couple of questions on your tips, if you don't mind.
Sure.
You mentioned about negotiating with current creditors. I think that's a great tip if you can do it. Does that negatively impact? I mean, how does that work with the creditors? If you can successfully negotiate that, does that have any kind of impact or?
Absolutely. So when you're working with like a collection and you're trying to get those removed, what's great is that when you're able to get them to remove when you're able to negotiate a settlement off the credit report, that negative remark can be removed from the credit. So it's a great way to improve your credit score.
Okay.
I have a question.
Okay, go ahead, Mike.
Okay. We'll go back and forth. Great question, Jocelyn. So question for you, Adam. So right now with the Federal Reserve dropping interest rates, consumer rates, right, down to 0%, if they contact their credit card company, or let's say their auto loan, and they negotiate interest rate, does that affect them in any possible way in terms of FICO score? Because I've had that question come across a few times. I'm like, I don't believe it should. It's going to help you definitely drop your monthly payment, right, and help you pay off that principal balance a lot quicker. Would you recommend going and have them call them and do negotiations?
Are you referring to like negotiating on rates, or are you
interest rate on credit cards? Yes, sir. Correct.
Yeah, I mean, if you can negotiate any kind of more favorable terms on interest rates, that's obviously going to help a lot.
Yeah.
And obviously, the lower monthly payment helps everybody on their bills, so that's definitely an advisable strategy.
Okay, perfect.
And then you mentioned checking your score regularly, but not too many inquiries. Like, how often should we check our credit scores?
Yeah, it's advisable to check every couple months.
Every couple months.
But if people are responsible with paying their bills on time, and but there's a lot of websites out there where you can download a free credit report every once in a while. It's great to check that regularly. But I mean, usually the credit bureaus are very accurate. But one thing that people need to understand is that any creditor can post up information into their report at any given time. And so it's important just to make sure that nothing new pops up on those reports.
Wow. And Mike, now I have a question for you. I mean, what is considered like, I mean, obviously not everyone can have like a perfect credit score. In your world, what is the goal, as far as like credit score? And then a follow-up question to Adam is, like, let's say there's something keeping their credit score from being, ideal for Mike's purposes. How quickly could we, have you help fix whatever the problem is, and that result, be uploaded to Mike quickly? I don't know if that makes sense, but.
Sure, no, that makes perfect sense.
Okay.
Yeah, good question, Justin. So, I mean, the great thing about being a lender, a direct lender, a correspondent lender at Prime Lending, is that we have multiple investors that will accept different types of scenarios when it comes to credit scores. Obviously, if you definitely want to secure yourself the lowest possible rate from what you see on advertised on TV, a lot of those lenders are posting interest rates from FICO scores up to like 720 and above. For the most part, 720 and above would be like the sweet spot when it comes to low interest rates. Now, you can still be eligible for these VA programs and these FHA programs, which are obviously government programs like USDA as well. And there are lenders out there that will still go as low as 580 credit score. Right. It's but at the end of the day, we're still looking at the overall big picture. Are you still managing your credit card bills? Are you still managing your installment loans? Before I even dive into putting them to a mortgage, because it's a 30-year commitment, we'll do everything we can as a loan officer to coach them and utilize like Adam and his services to help them get into a better position before they start shopping for their dream home with Jocelyn. So again, there's different programs out there that's available. But if you have the opportunity during this downtime to improve your scores, take full advantage of it.
Yeah. So
Yeah.
Adam, like, if let's say someone contacts you and says, okay, I want to take that step, but my credit is not where it needs to be, I want to secure your services, how long does that process take?
The process can take different times for different people. So what we do is what we're doing is we're challenging the credit bureaus, which then in turn are challenging creditors. Now, some people may have older, later paid collections on their accounts, and those are more easy for us to remove because sometimes those creditors are either out of business and they don't respond. Sometimes they don't have the financial interest. Maybe the collection's been paid, and so they look away, and so they're not verifying the accounts. And sometimes it's not in their economic interest to respond to our letters. And so they don't verify to the creditors. And once they don't verify to the creditors, that item has to come off the credit report. And then sometimes there's people that have maybe newer inquiries that are more challenging because those creditors want their money and they're much more diligent about getting paid. So the process can take a different amount of time for different people. We've had some clients that have had 100% of their scores improved within 2 to 3 months. Some people it takes more like 4 to 6 months. So the process just depends. We don't have a crystal ball, but we are following the Fair Credit Reporting Act. And so what we're holding these creditors to is that the information is 100% accurate and verifiable. And so what we're making sure is that everyone's credit reports are 100% accurate. And so what we're doing is we're wearing down these creditors so that they remove these credit items.
Got it. And then, so what would their first step be? Would their first step be to print out their own credit score and then come to you? Is that how you do it? Or do they come to you first and then you tell them, where's the best place to find your accurate report?
Well, we're 100% referral based. So what happens is usually Michael would call us with a client and say, Adam, I have a client for you, and he would provide the credit report for us. But the client can contact us directly as well, and we can do a $1 soft report through a company called Identity IQ, where we do a $1 soft report and get the credit report, and so we can do it that way as well. So there's many different avenues to get the process started. It's relatively easy. And so they just provide a couple of proofs of address and driver's license and verification, and we're on our way.
That's perfect. I'm going to share my experience too. We had a client who came to me getting qualified for a home loan for one of our government programs, but unfortunately his credit scores just didn't work out for him. So I referred him over to Adam and his team. And from a loan officer perspective, I wanted to make sure that my client obviously will have that great experience and actually keep me in the loop. So with Adam's team, what I noticed too is that they'll provide that customer a back office, right? So they can access any changes to their credit scores, any improvements, they're going to be notified. I also received notification via email, not only from Adam's team, but from him directly on how our client's progress is coming along. Has there been any improvements? And maybe it's a good time for me to reassess my client's situation and see if they can be eligible for that loan, which I love. So it's not something I refer and say, okay, bye, call me when you're ready. He keeps me in the loop, which is
that's great.
It's important, especially being in the referral business. Yeah. So
and then that's same thing with me. Like I come across people like, I'm not ready to buy yet because my credit isn't where it's supposed to be. So it's kind of like a trifecta between the three of us that, I, come across those clients. I say, okay, Mike, here, they're not ready yet, but let's take care of them. And Adam, would be in the mix too. So this is awesome.
Yes, we at Brightside, we stress communication 100%. One of the common stigmas with credit repair companies is that they don't communicate with their clients effectively. So we have an online portal that keeps everyone connected: the mortgage broker, the client, the real estate agent, all on the page. So every 30 to 45 days when we get these results, we're posting up to the account. The portal's updated. They get a call from our credit analyst analyzing the results. And so everyone is comprised every 30 to 45 days of all the updates so that everyone's making informed decisions in real time. And so we really stress that communication, which is really, really important, because credit is one of these, it's a kind of a tricky industry, and it can really determine, making all the right decisions.
Yeah, and it's tough because people sometimes just don't want to face their biggest fears, and so it is nice to know that, hey, we're in this as a team. This is
Right.
not to shame anyone. It's just to help you improve your lives and your livelihood.
Yeah, absolutely. And I would agree. And I would say, people's credit is very personal.
Yeah.
And people, as you just touched on, maybe they made some bad decisions or got caught up in a tricky situation, or, just went through a rough patch in life. And those, the important thing that we stress is that it's all fixable. And it just takes some time. It takes some patience. And with our services and with being on the right team, we can fix that situation, and they can get into the home of their dreams.
Yeah. And like you said, it is a touchy situation. So, I wouldn't be surprised at all if, a client of Mike or I would prefer us not to know anything about it, but just go to you directly, which is perfectly acceptable and wonderful. Whatever it is to make them feel most comfortable is what we want.
Absolutely. Yep. We're here to help.
Good. And then, I kind of have a question. And again, I don't have a crystal ball, but I just wonder, with COVID and everything going on with furloughs, all of that, like, and this might be a naive question, but do you think that creditors are going to be a little bit more lenient with, late payments and things like that in this time? Or do you think they're just like, nope, it is what it is,
No,
deal with it?
No, I don't, creditors are not known for being lenient. And
Got it.
so it's unfortunate, but they're not going to be giving people breaks because they're late. What they're going to continue to go by their standards and their processes. And, that's why it's so important for people to really try to continue to pay their bills on time, to be diligent. One of the most important things that they can protect right now is their credit. And I know that, in these times that can be difficult to do. But that's why it's so important to, really make sure you pay your bills on time, reach out to creditors that you owe money to, and maybe, get a settlement, make sure you pay those credit cards down to 10 to 30% every month. Great credit utilization. Don't close any accounts. Don't go off and, buy anything, new and big right now. Cause that can all affect the credit score.
Adam, you mentioned something about don't close out your credit cards, because that's one of the biggest questions I get most of my times during conversations, especially when clients are refinancing through me, paying off debt. And I always recommend pay down your balances, but don't close your credit card. Why? Because from what I've learned from you, once you actually close that credit card, then you stop creating history, which we need in order to build those credit scores. Is that still the general rule? Pay them down, but don't close them.
That's right. You want to keep those credit cards open, because it establishes a good, reasonable history. And so creditors look at that history as reasonable, length of history, and that you've been able to be a good borrower for a reasonable amount of time. And so that's really important, not to pay out, to close those accounts. It may feel like it's the right thing to do, but in fact,
right.
You really want it feels like it's the right thing to do, but in fact, you really want to keep those credit cards open, even if you don't use them.
Yeah, I tell my wife, go ahead and pay it off or pay it down, and then give me the credit cards, and I'll cut
Right.
it.
Yeah, right.
Right, Joss?
Yes, cut it, don't close it.
Yeah, I'll cut it in front of you if it makes you feel better. Just don't close it. Yeah.
What was it? I had another question. Oh, again, I know that furloughs and layoffs are going to be inevitable. So, a couple years in the future, if, I hope we don't, but if we do see more short sales, foreclosures and things like that, the recovery time after that, is that just a matter of time, or is there anything that people can do to improve their credit after a short sale or a foreclosure or bankruptcy? Is it just time, or is there more things that we can do?
Yeah, unfortunately, those items are going to stay on your report for 7 years. That's the statute of limitations. Maybe that's a question for Michael. I'm not sure, but once it hits your credit report, that can stay on your credit report for 7 years. So it's really a matter of time. We still go after the blemish on the credit report because we audit 100% of everyone's file. But those are items that will stay on your credit report for 7 years.
Yeah, Mike, and I know that, maybe this is not the right time to talk about it, but I know that, you have certain time frames for after a short sale or after a foreclosure or bankruptcy. So
absolutely. I mean, there's still available seasoning periods, and that hasn't changed yet with Fannie, Freddie, and with FHA. So, if we're talking about government loans, you can get into your next property for a minimum of 2 years. Sometimes up to 3 years, so just depending on the program that you're qualifying for. Yeah, those seasoning periods between 2 to sometimes even 4 years. So just depending on the program. And my recommendation is if you have the opportunity to short sell, and like you mentioned, how to rebuild your credit scores. Well, first of all, hopefully you're back at work. Hopefully things are getting back to normal, because those are the reason why you had to short sell, right?
Right.
Furlough, maybe work. So hopefully, first and foremost, find a budget. You're possibly renting now or living with family, and then maybe start reestablish your credit scores by opening up a secure credit card. Those are things that I've given my clients in the past, establishing your credit. What's your take on that, Adam, with secure credit cards to help rebuild credit scores?
Yeah, secure credit cards are a great way to rebuild credit. You can get them for $200-$300. You put $200 down. They report to all 3 bureaus. It's really important when you get these starter cards, and we have them on our website. When you get these starter cards, that they report to all 3 bureaus in 30 days, because that's where you reestablish the credit. And so they're available. The APRs aren't too bad on them. They are higher than kind of prime credit cards, but they are a great way to rebuild your credit history.
Yeah. Or build it. I've got a 16-year-old, and sometimes we talk about working. And I just remember as a 16-year-old, I wanted to work right away because I wanted my financial independence. But along with that comes, the temptation of a new credit card, and it is tempting for young kids, that don't have money. So I think the secured credit card sounds like the right route to go for someone just starting.
That's a great point. And then through time, once they've established a good history, then they can apply for other credit cards with higher debt limits and utilization. But they want to keep those starter cards open as long as it's a great way to establish that history that we were talking about. Because if you establish one at 16 or 18 years old, I read a story about somebody who was going to college, and they were able to get their score to an 800 because they started out with a couple of starter cards, and then they got another credit card, and they were able to establish a great history. So yes, the secure credit cards are a great way to control spending, but establish great credit history.
Yeah, that's a good way too for our young generation. It's because when you do secured, I always tell them, if you want a credit card, let's use your own money, right? It's their money, it's their skin in the game. So it helps them establish credit and also give them that responsibility to save, and then have that plastic, right? Because I remember how it was when I would have that plastic with my name on it. It's just empowering, right? As a young child, as a young teenager.
Right.
So, yeah. Okay.
It's a feeling. It's a kind of a feeling of independence and maturity.
Yeah. Exactly. So
absolutely,
let's teach our young ones at a younger age as soon as possible. Definitely agree with
Yeah,
that.
and they could buy a house sooner. They could buy a house in their 20s.
Do it.
Right.
Right?
Yeah,
Yeah, that's good.
absolutely.
So, again, I think these are great pieces of advice. And I think really the overall gist of it is, we all make mistakes. I mean, no one is perfect. So I think there's just no shame, don't be embarrassed. It is what it is. And just, take the first step, just face your fears and, contact Adam if you are in the situation, or if you know someone that's in the situation that really wants to do something about their debt, but just don't know where to begin. So that's kind of my thought.
Well,
Job.
that's great thoughts.
Adam, what's your website and telephone number? How can we reach you?
Yes, my website is www.brightsidecr.com. And the best number to reach us at is 714-378-9900. And that we have a credit special enrollment agents that are standing by that can go over the program, go over the fees, go over the credit report with you, and get you started right away.
Awesome. And you guys are open right now, right, during COVID. You have a team working behind the scenes, correct?
Oh, absolutely. We're
Perfect.
some of us are working remotely, but yeah, we're fully staffed, and we actually just hit our record month. Right now, a lot of people are really, have the time to concentrate on their finances and are making sure that their credit is in good shape. So we're incredibly busy right now, and we're really helping out a lot of people.
Great.
Awesome.
Thank you so much. Thank you to both of you for being on, and again, just sharing your knowledge. And again, people are, sitting at their homes wondering what should I be doing to improve myself during this time? And this definitely is one of those things.
Absolutely.
Great.
Perfect.
Thank you so much, Adam and Mike, and we'll see you again.
Thanks, Jocelyn. Thanks for having me.
Absolutely.
Bye.
Thanks for having me.
Enjoy your
You're
coffee
welcome.
back there.
I
I'm jealous.
will.